Alright traders, whether you're fresh in the game or already chasing that next big breakout, today's video is about to become your secret weapon. We're diving into the stochastic oscillator, a game-changing indicator that could be the key to unlocking precision in your trades. Think you know all about it? Stick around, because by the end of this video, you'll not only master it but also understand how to think like a pro trader. Here's the deal. Trading isn't just about following signals or mimicking someone else's strategy. It's about learning to analyze the market with sharp focus, catching trends before everyone else, and making decisions based on a whole picture, not just one flashy indicator. And let me tell you this, if you're not managing your emotions or staying cool under pressure, the market will chew you up and spit you out. Harsh truth? Maybe, but it's the reality of the trading world. So why does this matter for you? Because most traders fail when they rely on shortcuts or guesswork. That's why I'm here to show you how to combine technical analysis, trend tracking, and proper risk management to get ahead of the crowd. By the time you're done watching this, you'll not only know how to use the stochastic oscillator, but also how to integrate it into a system that actually works. And speaking of systems, let me introduce you to a tool that will blow your mind. Our team of trading geeks has developed a free trading bot that does the heavy lifting for you. This bot collects real-time data from multiple indicators. It simplifies massive amounts of information into actionable insights. And yep, it even tells you which way to open your trades based on a full spectrum analysis. Imagine having a personal trading assistant that crunches numbers faster than you can say market reversal. Whether you're a scalper, a swing trader, or just getting started, this bot is designed to save you time and improve your decision making. Oh, and here's the kicker. When you grab the bot, link in the description, you'll also unlock a 100% deposit bonus with our promo code. That means if you deposit $50, you get an extra $50 on top. Drop in $300, and boom, your trading account now holds $600. The promo code only works on your first deposit, so don't sleep on it. Why is this video a must-watch? Because if you're serious about taking control of your financial future, you need to do more than just dabble in trading. You need the knowledge, the tools, and the mindset to make it happen. And that's exactly what we're covering today. Hit that subscribe button, turn on notifications, and let's get into it, because success in trading waits for no one. Ready to level up? Let's go! Alright, let's take a look at the American dollar-Swiss franc pair. We'll check the 5-minute and 15-minute timeframes to get a clear picture of what's going on. Right now, the indicators are looking pretty neutral overall, but most of them are leaning toward a sell signal. On the 15-minute timeframe, there's a higher chance that the dollar could drop in value. And hey, quick reminder, our bot isn't some magic money button. It just gives you data on what the indicators are saying at the moment. It doesn't predict the future, nobody can. Before you enter a trade, always check the chart and do your own analysis. Let's start by defining the range we're working within. I'm focused on the local maximum and the local minimum. Specifically, it's worth noting that the last maximum was a while ago, and the price just keeps dropping, hitting new lows. Check out this descending channel. The price has been consistently bouncing between these trend lines, and it's approaching the upper resistance level. Historically, every time it hits this zone, it drops back down. That's our first clue. Second, let's talk indicators. The stochastic oscillator is in the overbought zone, signaling that the pair is likely to reverse downward. Meanwhile, the MACD is showing signs of weakening bullish momentum, hinting at an incoming downtrend. And finally, the ADX tells us the trend strength is solid, perfect conditions for a short trade within a channel. Combine all this, and it's a textbook setup for a profitable trade. I've set my expiration to align with this predicted move. Now we sit tight and let the market do its thing. Let's take a look at the price movement. We can see strong bearish impulses highlighted by the blue arrows. After each drop, the price tried to correct upward, but the rebounds were weak. This signals that sellers are in control while buyers are losing momentum. Now, let's examine the resistance zones. The red rectangles show areas where the price tried to push higher but faced strong rejection from sellers. These levels act as barriers that the price hasn't been able to break through. Finally, let's look at the volume. During attempts to rise, volume decreases, while bearish moves come with increasing volume. This confirms that the market supports a downtrend. In summary, weakening buyer momentum, strong resistance zones, and volume behavior all point to a high likelihood of the price continuing to fall. By the way, when you start using our team's bot, you'll get an exclusive invite to a private VIP chat where I share real-time trading signals and in-depth analysis. And now, let's get to the topic of today's video, the stochastic oscillator. If you've ever wondered how traders figure out when the market is overbought or oversold, this little indicator is like your personal market whisperer. It compares the current closing price to the price range over a set period of time and spits out a percentage between 0 and 100. The magic happens at the key levels. Above 80, the market is considered overbought, and below 20, it's oversold. Now, let's break it down step by step using the chart in front of us. At the start of the chart, the stochastic oscillator climbs above 80 multiple times. This aligns perfectly with the moments when the price hits its local highs. These spikes in the oscillator signaled that the market was overbought, and sure enough, we saw the price reverse and start falling shortly after. Sellers took control just as the indicator predicted. As the price dropped sharply, the stochastic followed suit, dipping below the 20 level into the oversold zone. This indicated that the market was overloaded with selling pressure, and buyers were starting to step in. Not long after, we saw a brief correction upward, proving the oscillator's reading was spot on. In the middle of the chart, the stochastic starts oscillating wildly between the 20 and 80 levels. This reflects the sideways movement in price, a classic consolidation phase. Neither buyers nor sellers had a clear upper hand here, and the market was stuck in a tug-of-war. In the most recent part of the chart, we see the stochastic slowly climbing back toward the 50 level. This coincides with a small upward correction in price after the previous drop. However, the K-line hasn't reached 80 yet, and the price hasn't shown any strong bullish momentum, signaling that buyers are still too weak to push the market higher. At this point, the stochastic is in a neutral position, hovering around the middle. If it climbs above 80 again, it could signal another drop, especially if the price tests a resistance level. Conversely, if it falls below 20, it might indicate a new buying opportunity. So, the stochastic oscillator is an incredible tool for spotting overbought and oversold conditions. In this chart, it highlighted key turning points in the market, from sharp drops to weak recoveries. As of now, we're watching closely to see if it gives us a fresh signal. Remember, patience is key, and this little tool is one of your best allies for timing your trades like a pro. Well, the first trade is closed in profit, and that's awesome. But life isn't a perfectly paved highway. It's a winding road filled with bumps, detours, and wrong turns. Progress isn't linear. Some days you'll sprint forward, other days, you'll stumble. The key is to keep moving, even when the path feels uncertain. The destination is still ahead. No matter how hard it gets, no matter how many times you fall, the most important thing is to keep moving forward. Progress doesn't require perfection, it requires persistence. Even the smallest steps add up over time. Every stumble is a lesson, every setback a chance to grow. The only way to truly fail is to stop trying. Keep going, because the future you want is built on the effort you put in today. Don't stop now, you're closer than you think. Alright, we've moved on to a new pair, and here we've got a sell recommendation too. Let me set up TradingView while the chart loads on pocketoption. Perfect, we're ready to roll. Just like last time, I'll start by marking the positions of the local maximum and minimum to get a sense of the overall price movement. Next, we'll look at the price ranges and decide whether to enter a trade for the dollar to rise against the Japanese yen, or for it to drop instead. First off, just look at the descending channel. The price has been stuck in this well-defined downtrend, bouncing between the upper resistance and lower support. Right now, the price is near the middle of the channel, but it's already rejected any attempt to break higher. History tells us that the next likely move is down toward the lower boundary of the channel. Now, let's talk about the stochastic oscillator. It's showing a clear downward cross after brushing near the overbought zone. That's a classic sign that bullish momentum is fading and sellers are starting to take over. Every time we've seen this signal on this chart, the price has moved lower. The MACD adds to the bearish outlook. The histogram is shrinking, and the signal lines are on the verge of crossing downward. This tells me that the bullish push we saw earlier is losing steam, which usually signals an upcoming reversal. Now, let's take a look at the candlestick chart to get a broader view of the situation. After all, it gives us way more information than a line chart. A line chart only shows the closing prices, but it doesn't tell us about the opening or the price movements in between. So, the red arrows point to the aggressive downward moves that dominate the chart. These sharp drops are followed by weaker upward corrections, showing that the sellers have much more strength than the buyers. This pattern suggests a continuation of the downtrend. Now, look at the red rectangles marking the key resistance levels. Every time the price tries to push upward, it hits these levels and gets rejected. Not only that, but with each attempt, the highs are getting lower, which is a clear sign of weakening bullish momentum. Sellers are stepping in earlier and dominating the market. What else can I say about the stochastic oscillator? It's one of those tools that, when you get the hang of it, can feel like having an extra edge in the market. But here's the thing, it's not perfect, and as a trader, you have to know where and how to use it to make the most of it. Let me share my perspective. The beauty of the stochastic oscillator lies in how simple it is. It highlights overbought and oversold conditions. Easy, right? But for me, it's not about taking these signals at face value. When I see the oscillator hit 80 overbought, I don't just jump into a sell. Instead, it's a cue to dig deeper. Is the trend weakening? Are there other indicators confirming this? Another thing I've learned is that stochastic settings make a huge difference. For short-term trades, I tweak the period down to catch faster moves, but for long-term setups, I go the other way, smoothing out the noise. It's all about adapting it to fit the market and my strategy. In a range-bound market, the stochastic shines. When the price is bouncing between support and resistance, the oscillator gives me excellent entry points. Overbought near resistance? Time to sell. Oversold near support? That's a buying opportunity. It's almost too good in these conditions. Now, in a strong trend, things get tricky. The stochastic can stay overbought or oversold for what feels like forever, even as the price keeps climbing or falling. That's why, in trending markets, I use it as a secondary tool rather than my main signal. For example, if I'm trading an uptrend, I'll wait for the oscillator to come out of oversold territory before looking for buying opportunities. One of the biggest strengths of the stochastic is spotting divergences. If the price makes a new high, but the stochastic makes a lower high, it's a red flag that momentum might be fading. Same goes for bullish divergences. A lower low in price, but a higher low in the stochastic, tells me buyers are stepping in. But here's the catch, divergences often form early, so you need to wait for confirmation before acting. I rarely use the stochastic on its own. Pairing it with other indicators has made it far more reliable. Let's start with MACD. If the stochastic signals a sell and the MACD crosses bearish, it's game on. Next, moving averages. They help me gauge the trend. If the stochastic gives a buy signal, but the price is below the 200 EMA, I'm more cautious about taking the trade. And finally, ADX. This is a must for me to measure trend strength. If the ADX shows a strong trend, I tend to ignore stochastic's counter-trend signals to avoid false reversals. So, what's the bottom line with the stochastic oscillator? It's a powerful tool for spotting overbought and oversold conditions, timing entries, and even catching early signs of reversals with divergences. But like any indicator, it's not foolproof. Its real strength comes when you combine it with other tools. Remember, trading isn't about blindly following signals. It's about understanding the story the market is telling. Use the stochastic as a guide, not a rulebook, and it can become a valuable part of your trading arsenal. In this situation, we read the market correctly and entered the trade at the right time. And now, we're about to close it in profit. While we've still got time, let me tell you about our contest where you can win $1,000 with just one random comment. The rules are simple. Watch this video all the way through, give it a like, subscribe to the channel, and leave one comment related to trading under this video. I'll pick 2 winners using a randomizer and post the results in our Telegram channel. Our team also shares trading insights and helps traders learn there. Links in the description, so make sure to join. We run this contest every week. And that's it for today's video, my fellow traders. If you want to level up your trading game, don't forget to check out our analytical bot. It's like having your own personal assistant for spotting opportunities in the market. Trust me, you don't want to trade without it. If you found this video helpful, smash that like button to let us know, and make sure to subscribe to the channel so you don't miss what's coming next. We've got even more exciting content, tips, and strategies on the way. This is just the beginning. Let's trade smarter together. See you in the next one.